It's a slightly negative start across the Asia Pacific, and that is also because of the lack of cues from Wall Street.
I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that.
And a couple of them came out from the F&O ban. Yesterday, you had a late surge that we saw on Sun TV. So that's one of the stocks that could be in your radar.
Because their Dadra facility has now received a warning letter from the US FDA.
Tony has written on financials wherein various stocks have been upgraded and downgraded as well.
The first tick on the Nifty is in the green by about 20 odd points, 15 points.
Comfortable. Every of our shareholders want us to be in the steel business.
Our unsecured loan book is pretty good.
Caps have recovered. The mid-cap index is actually looking quite good right now, 0.7% higher.
The valuation is just the score, is the way we call it. So we are all about playing the game.
Health Minister JP Nadda has reviewed the heat wave situation across the country.
It's the big boys that's actually dragging the markets higher, and Bank Nifty continues to support. Yesterday, 2% higher. Today, they continue to support.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel D'Souza, and joining me today is Sonia Shenoy, and Surabhi will be with us in just a while. Well, Sonia, it's a good-looking screen. The Nifty is still holding well in the green. We're up close to around 80 points odd. But I think at around that 23,660 odd, we're seeing some bit of resistance. We went there yesterday, and we came off a little bit. Even today, from the high of the day, some kind of profit-taking is creeping in as we speak.
It is actually, but it's not such a bad outcome by the end of it. Yeah, par for the course, absolutely. And the good thing is that yesterday there was a lot more intraday volatility. Today the volatility happened, but just in the last 1-2 hours of trade. So that's always a good thing. The Nifty actually is up about 50 odd points. The Nifty Bank is the one that we have our eye on, and after the kind of move that we've seen in the last couple of days, it's managed to add on some more weight. So just look at that. In the last 1 month, in the month of June, it's been almost an 8% rally that the Nifty Bank has seen, and a lot of banking stocks have contributed to the move as well. In the broader markets, you have metal names, you have chemical stocks, you have a whole host of other pockets that are looking pretty good. In fact, in the last 5-10 minutes, it's chemical names that have come back in a big way. So let's see which way it goes for the rest of the day, though. For the rest of the hour, things could go either way. We didn't have any global cues. The US markets open after a holiday, so let's see which way things go.
Well, that's right. And you have the weekly expiry as well that will play out in the next few minutes. So that's another factor that can add to the volatility. What slipped in the last few minutes? I think a couple of names. Wipro has moved to the low point of the day, so I think we should get that one up for you on the screen. And HDFC Life, that's another one in there that's seen some bit of a move in the last few minutes. So both those two stocks should come in. I think there's an inclusion that will take place. So there could be some rebal as well that's in store. Tomorrow, that is, 21st, yes. So we'll have in the sensex, the inclusion will be Adani Ports, and the exclusion will be Wipro. So we'll have to keep an eye out on that stock as well. Well, let's get in our technical experts to find out how do you trade the final hour. Mitesh Thakkar joins us to help us out with that. Mitesh, it's a good session. We're up close to around 50-60 points. What would you do if you had a long position? Would you take some money off the table? Would you trail your long position with a stop loss?
Nigel, I think once again today it is the Bank Nifty which is slightly stronger than the Nifty. The good thing is that Nifty, though it did have some kind of a correction early in the day, but we never threatened to break below 23,400, 380 zones. I think maintain your long position. We are not adding on to them, but just trailing the stop loss over 23,400 now, and hoping that if the sideways action breaks on the upside, then I think you might see continuation to 23,700 and then eventually 2950 as well. So quite positive. On the stock side, Bandhan Bank has broken out. So keep a stop at 204 half, look for targets of 220 here. And the other one which I like is Bata India, which I would recommend buying with a stop at about 1447 for targets of 1510.
Okay, got that. For now, okay, Bata is up almost about 1.5%. So looking pretty good over there. But let's also talk about some individual stocks. Now, CE Info Systems is the stock on my radar. We actually had a Goldman Sachs report where Goldman Sachs has initiated a buy on the stock with a target price of 2,800. Even after the 20% rally that CE Info Systems has seen, the target price is still above the current market price. So that is the kind of bullishness that Goldman Sachs has. They say that the company is now well poised to benefit from its leadership position across segments, whether it's automotive navigation, mapping devices, connected vehicles, and the valuations of the stock are also looking pretty good. But this was, of course, before the rally that we saw. Goldman Sachs also had a buy on Uno Minda, where they initiated a buy with a target price of 1350. But particularly on CE Info Systems, let's go across to Deven Choksi of DR Choksi FinServ. Deven, hi, good afternoon, and thanks for joining in. It's a big move that we're seeing on CE Info Systems. I don't know if you tracked that stock, but any thoughts here, and would you advise buying it at this price?
Yeah, good afternoon, Sonia. Well, I think it's a wonderful business model per se, I guess, and I think the each and every segment, be it the auto segment, be it even the government segment where I think they collect this particular data, I think they are all basically putting in higher amount of order. Most important part here is that I think they have the visibility of around 35-40% kind of a CAGR growth in next 3 to 4 years, and that is, I think, quite evident from the order position also that they're carrying. Plus the technology platform through which I think they're supplying the data, including to likes of Hyundai, Kia, or even for that matter other customers. I believe that I think this is where probably this company is going to succeed with both IoT as well as SaaS model that they have. So from a perspective of looking at the business, I think it looks absolutely very convincing. Well, I think if the growth rate is at around 35-40%, valuation above 50%, market is trading slightly at a premium. But in this market, obviously nothing is cheap. So one will have to buy with a slight amount of caution that any corrective downside may bring down the stock price. But otherwise, it looks, I think, pretty convincing for next 3 to 4 years of output that they have provided.
Okay, all right. Deven, hi, good afternoon. Good to see you. And Deven, I wanted to ask you some of these gas stocks, CGD stocks. You have Mahanagar Gas that's spiked up. Actually, we should get the intraday chart, all three of them, Mahanagar Gas, IGL, and Gujarat Gas. They are flying away. That incremental up move has come actually in the last 30 minutes or so. Any view on these names, Deven, and which one do you like?
Well, I think, Nigel, good afternoon. Obviously, the volume play is on at this point of time. I think majority of these companies have actually, I think, started fetching the better volume realization as far as the books are concerned. At the same time, the input cost, I think, remains under control. So to a greater extent, I think it is both the growth on the volume as well as on the margin. Both are, I think, coupled at this point of time together. Being a utility business, I think they will have its own subjectivity as far as I think the ups and downs due to the pricing. But overall, I think the segment is convincing. At this point of time, we don't have any recommendation on any of the companies at this point of time. But Gujarat Gas remains and Adani Gas remains, I think, as part of our portfolio. So that's a standard district.
Okay, thanks a lot, Deven, for that. Well, we have many more questions for you, but in the meantime, let's also get a handle on what's happening in individual stocks. Sun Pharma has slipped in trade after the company's Dadra facility received a warning letter from the US FDA. Ekta is here to tell us more about that. Ekta, over to you.
Well, yes, Sun Pharma's Dadra facility has received a warning letter, but it's not come as a huge surprise to the market simply because of the timeline of events which took place with the Dadra facility. In December of 2023, it was inspected. It had received 6 observations at that point in time. It then got escalated and classified as an official action indicated status, which took place in April of 2024. Now, that has now been escalated to a warning letter for the facility. What a warning letter means is that the production of the current, medicines will continue or drugs will continue, but no new approvals will be allowed. That is better than receiving an import alert where all production stops immediately. The street, while we don't know whether they can get an import alert, the street is assuming that if they haven't yet received it, it's unlikely that it would happen for the Dadra facility unless the remediation doesn't go on track. In terms of contribution, one of the most important drugs, Revlimid's API, is manufactured from this particular facility. So yes, that would impact earnings, but the overall contribution is expected to be in single digits for the entire US sales. On a larger picture for Sun Pharma, this is one new facility which has received a warning letter, but they already have an import alert on their Halol plant, and they have received a non-compliance letter for their Mohali facility as well.
Okay, all right. Ekta, thanks a lot for that. Well, that one's underperforming in today's trading session, down close to around 2%. They've been, a bit of a negative news, whereas Ekta said it may not be that negative. What's your view on the stock? It's 2% lower. Would you look to buy into this dip?
Yeah, maybe I think as of now, the price and value-wise, I think the stock is fully priced. Of course, I think with the specialty generic products, I think that they have in their portfolio, they definitely give good amount of visibility on the business sides. There is no question on that aspect. And as such, I think this particular alert which has come up, I think from the US FDA, I don't think that I think it is going to change the needle much as far as I think the business is concerned. As such, the existing business continues, and I don't think that that is going to have any meaningful effect onto the financials of the company. So yes, I think it's a good opportunity, particularly from the perspective that they have, I think, a good pipeline of products which are in specialty generics, where they have a higher margin also. I think from that perspective, if you are looking at a company, I think in the corrected price, rather, I think it could be a good opportunity to buy it.
Devin, these power financiers, they were the other way to play the power theme. And these stocks in 18 months, if I'm not mistaken, they're up close to 3 times. I recall explaining PFC at around 130 rupees. Currently, it's around 480 rupees, but it's corrected from the recent peak. Even in today's trading session, it's down close to around 4%. Do you think bulk of that argument that this is another way to play the power space, or whether it was on the valuations front, all that is in the price at 480 rupees?
Well, I would think that there should be further upside to that, largely because of the fact that the valuation is not so expensive. Balance sheet has been corrected to a significant extent. The demand from the sector is growing. And I think these companies are basically both REC, PFC, both these companies are relatively much stable as of now. So we believe that I think the corrected prices, I think, would be a good opportunity to buy into this portfolio. Maybe the valuations are also to the advantage. They are not so expensive, so that gives you additional hope.
Okay, we have to take a short commercial break on that note. We'll do one thing. We'll take that break and be back. We'll have our Alpha Manager Vinay Jay Singh of JM Financials on the other side. Welcome back. Well, the market is not bad actually. It's holding on to its gains. It's the Nifty Bank that has been the big mover once again today. I mean, by big mover, I'm saying, 0.7%, while the Nifty itself is about 0.3%. But be that as it may, lots of traction coming in from there. Devin Choksi is back with us. Devin, everyone has been talking about HDFC Bank and Kotak Mahindra Bank, but the other one that's been slowly participating is ICICI Bank as well. Any thoughts here? It's come off its lows today. Do you think that there could be more traction on the upside?
Indeed, absolutely. I think the amount of the loan growth that we are experiencing in the economy is something which is absolutely very convincing. On one side, the government is putting more amount of investment in building the infrastructure, and so the industries are required to put in the capacities. And that's where I think some of the larger banks like SBI, HDFC Bank, and even for that matter, the segments in which I think the ICICI, Axis and Kotak operate, I believe that I think they have reasonably good amount of runway ahead for them. Maybe I think 18 to 20% kind of a CAGR growth in the loan book is giving you the visibility of doubling the size in 4.5 years time. So from that perspective too, I think these companies looks interesting in their position. Evaluation wise, they are not far too expensive. They probably I think even within the range of around 2.5% at the best. I think on the valuation side, price to book well. So from that perspective too, I believe that I think this bank is interesting in position. Maybe a must in the portfolio as far as I think next 4 to 5 years outlook is concerned in the investments.
Devin, I wanted to ask you about some of these cement stocks. Stocks like India Cement, forever it's been, been noted as a value pick. It goes to around 150, 200 rupees. You see some buying over there. It goes to 250, 270. Again, it does a U-turn. Now, the problem for the last few years is some of these companies have capacity, but there's no buyer. Suddenly, Ambuja Cements has gone and bought Pennar Cement, and that to a 10 million ton plant. Today, in fact, India Cements is up close to 6%. Any view on this name?
Not in particular about India Cement, but I believe that I think the pan-India capacity of Adani Group, that is DCC, Ambuja, and the companies included therein, along with, I think, the Ultratech, and even not too far behind Vishree Cement. I believe that I think these are the companies which have created significantly large amount of presence. And that's where probably I think the argument is for buying them into the portfolio. Largely because of the fact that I think given the spending which is happening in the economy, cement as a commodity is always going to be, I think, in higher demand. Fortunately, at this point of time, most of these companies have also been able to control their input cost, energy cost. And that's where probably the margin is protected. So a combination of high growth, high demand, better sales, and on the other side, I think the margin protections through which I think the profit book is growing. I believe that forget about the cyclicality of I think couple of months in a year in this kind of businesses. I believe that this company is probably I think with a larger capacity will have bigger advantage going forward. Maybe 20-25% CAGR kind of should be expected out of this business in next 3 to 4 years.
Okay. We still have about 40 minutes to go, so we'll come back to you in a bit, Devin. But for now, let's move on. The minimum support prices were closely watched by economists to see if they are much higher than last year, especially after the BJP seat tally was seen to have been hurt by farmer discontent. Lata is here to analyze the impact of the minimum support prices on the CPI. Lata, over to you.
Well, the MSP is always analysed, the minimum support price is always analysed to see its impact on CPI. This time, of course, more closely because there was this expectation that maybe there was farmer disapproval of the BJP's policies and therefore whether there would be higher increases. But actually the biggest weightage, cereals, and therefore in this case paddy, since wheat is a rabi crop, the MSP, the increase for paddy is 5.36. Last year it was 7%. So clearly that is not showing any indication of populism. Likewise, dal, arhar, which is what, tur dal. Tur dal is up 7.86% versus 6% last year, but that's also because there has been some double-digit pulses inflation, and therefore this is an incentive for people to grow more of pulses, and therefore that is a little higher. But the point is, the MSP itself doesn't enter the CPI. If the minimum support price is high, then market prices rise because traders have to pay even higher to get it from farmers, and therefore the expected price increase of the market rates is higher. However, at the moment when the MSP was being announced, already the paddy and tur dal prices are higher than the MSP price. So this is not going to have any impact on the CPI. The net impact, according to economists, is about 40 to 45 basis points. Actually, 40 basis points on the CPI. And last year it was over 60 basis points. So clearly, when economists are calculating the CPI forecasts, they factor in some MSP impact. This time it is not more than what they had anticipated. There is a slight higher increase in oil seeds, but that's more to spur production and not much crop is procured, oilseed crop. So it won't have too much of an impact on the CPI. The short point, no economist has raised their CPI forecast after looking at the minimum support price. The other question people were asking is, will the higher MSP indicate more populist budget? Now people are not making that connect anymore, because you may not want to give a higher MSP because you don't want inflation to rise. After all, food inflation is pretty high. You could still have a controlled inflation MSP policy and still have a populist budget. So people are not making that connect just yet.
Okay, all right, Lata, thanks a lot for joining in and filling us in with that quick analysis on that front. By the way, a quick check on the markets. Actually, we slipped a little bit from the top because we were holding around that 23,600 odd, and we've come off. Ultratech Cement actually has moved to the low point of the day, so that should come up for you on the screen. Wipro, we were highlighting earlier as well, Sonia. That stock as well has slipped a little bit, in this hour.
Okay, well, Vinay Jaisingh is joining in. He's the MD and Co-Head Portfolio Management Services at GM Financial Services. Vinay, thank you so much for joining us on the show. I wanted to start by asking you about the big event upon us, which is the union budget. Of course, at the end of July, July 22nd is when we're expecting it. But from a market perspective, is there anything that this budget can do to further, spur the animal spirits? Or do you think we are well on track despite the event?
So I think the market is looking at a couple of things in the budget. First is the comment of how populist is the budget going to be. The government is, I would say, very lucky that RBI has given in about 2.2 trillion or about 1.3 trillion incremental money coming, which was not expected earlier. As against 800 billion, you've got that 1.3 trillion kitty coming in F25, which was not expected in Feb. So how are they going to use that? Are they going to use that by increasing the housing PMAY schemes? Are they going to use that by increasing capex in certain fields? Or are they going to use that by increasing subsidy under the fields? I think this is the first important question the budget has to give us. Second is reforms as usual. Are we expecting anything on the taxation front? People are wondering whether, you're going to increase the gamut of taxation, reduce taxes at some part. So I think these are the two big comments which people are looking forward from the budget. First is it business as usual? And second is, are you going to make it a lot more interesting by changing the tax structure, albeit, getting it lower as against getting it higher?
Hi, Vinay. Good afternoon. Good to see you. And Vinay, what about the Indian markets? We continue to chug along 50, 100 points on a day-to-day basis. Do you think we're getting ahead of ourselves, or do you believe that we're in a sweet spot? Growth is coming about, inflation under control, and earnings as well are looking up. So we deserve to trade at these valuations.
So I come from the latter camp. Nigel, you said it better than I would, right? The word sweet spot, comes with the current account deficit. We'll start seeing analysts talking about the deficit going to a surplus in the next 3 to 4 years. We'll talk about the forex reserves go from $650, $660 billion to even close to $1 trillion in the next 3 to 4 years. We'll talk about the earnings growth now being a lot more broad-based. Earlier it was only about financials. Now we'll start talking about the Make in India themes, the capex structures which the government has done, which will increase the overall growth of the country. Now that's the background for India. But when you start looking at the rest of the world, they're still waiting for the big word called pivot, right? They're still waiting for the interest rates for US to start cutting it down. You're already seeing so much of pain on credit card companies. You're seeing so much of pain on mortgages in US. So at one end, you're seeing the rest of the world reducing or slowing down their overall GDP estimates. And here you're seeing India doing well. You did have a hiccup of what happened on the election day when you saw the market correcting. All we want to see in the sweet spot is policies, reforms as usual. let the companies do what they're going to do. The increasing free cash flows of the entire country is pretty amazing. And I think we are in a relative sweet spot. But yes, don't expect 2024 fiscal to be repeated in 2025, as far as the market's concerned.
Are there any spaces where you are a bit cautious now, Vinay?
We were grossly overweight in the capex sector. You know, we were more than 3x overweight in the capex sector. Capex including industrials, capex including cap goods space. I'm adding power equipment out there. The valuations in some of them, I'm adding defense out there as well. The valuations in some of them have gone and hit the roof. So, you know, we're getting out from them and looking at relatively safer havens, be it in the pharmaceutical space or be it in the private bank space, you know, which have become a lot more lucrative. Also, you know, we're trying to see if in the budget, if there's one thing which the government may announce on the housing part, how do we capture that? So, you know, we're kind of just shifting a little bit, but our three legs, you know, which is FinSam, Make in India and CapEx, the themes there are a lot more similar, just some tactical changes.
Yeah, CapEx needs cement. You all have been bang on in a couple of smaller cement counters, and we had a large deal that was announced last week. Out of nowhere, Pennar 10 million ton unit getting sold, had a good sum of money, 11,000 crores. Do you all continue to like some of these mid-cap undervalued stocks, or are you shifting now to the larger cap names because consolidation is going to drive pricing, and then the ones that have control on costing will actually do much better?
So again, Nigel, you know, you've given the answer, right? So we continue to hold those companies which have less than $90 per ton as the weighted average price. We think now's a space where you can go closer to the larger cap names. You know, even companies like Grasim, where you've got, you know, a bit of both. You know, you've got a holding company discount and some paint business coming in. We're looking at that. Among the small caps, incrementally in terms of buying, you know, we're keeping our eyes open, but we're thinking the prices are pretty much there, you know, wherein it's going from a buy zone to a hold zone.
Okay. From a buy zone to a hold zone. Got it. Just one follow-up question on some of these consumption spaces like autos, right? We've had a fairly decent run here. Growth has been good, especially for some of the passenger vehicle names. Some of the two-wheeler names are coming back in a big way. But do you think that the cycle has peaked, or is there more to go?
So I think rural India spend, as that comes up, you will start looking at a lot more two-wheeler names, you know, companies which will have one-off stories of theirs as well. Let's take the case of TVS. You will start seeing the margins which have already moved up, you know, inch up further, you know, 11-12% going to 14-15%. You'll see the EV story pan out there as well. So I think some two-wheeler names are pretty appealing. On the passenger names, I again think there are too many things going their way. Case in point, you know, we've always liked Tata Motors. We still like it. The stock's done well. The deleveraging part of the story is playing out very well. Now they're talking about breaking the company up into two and listing that. That will be another big fillip on for the company. And again, the EV angle would help Tata Motors as well. So we are pretty, you know, we like the auto story and we are pretty much invested in them.
Okay, all right. Vinay, you know, one theme that you all caught early was the defense pack. And I think HAL was one stock that you all got in early. I recall last month I asked you, I said, what's the view on HAL? And you're like, okay, you know, you all prefer HAL in comparison to BEL, if I remember that correctly. In the last 1 month, the stock is up close to 10%. What do you do from here? Hold on to the stock, or do you think from a buy it comes now down to a hold because the stock has as it is run up so you know, so steeply?
So, you know, Nigel, this is a question we are asking ourselves virtually every hour because, you know, it's not up 10, it's up more than 10%. And, you know, there was a time we bought HAL, which was at 1 year for...
Vinay,
yes.
It's up 10% from the last time we chatted, 11% to be precise, from last month till now.
Yeah, exactly, right? So that's too much, you know, so thanks, Nigel. So it's up like crazy. And that is obviously a concern for us. Having said that, we're very confident if there's one stock we want to keep on holding on to in the defense part, it is Hindustan Aeronautics, because we think at the end of the day, it has too many moats, you know, moat being technical, you know, the airline space is very difficult to replicate. Second is the maintenance part of it, which today it only has India as its business, you know, through Tejas, but it'll start getting global orders also coming in. Come 2 years forward, you're seeing the earnings drivers also increase. So we like Hindustan Aeronautics. We're waiting for a correction to get in more. Currently, we are moved from the buy mode. I would say we are between the buy and the hold mode for the stock. We really like this name, but we're thinking of it like as an FMCG name, which will keep on giving you at least 10 to 15% returns, not in a month. I'm smiling, not in a month, but at least over, compounding over the next couple of years. It's just doing too well, We don't want to break the mode from our side.
Well, Vinay, just one final question from my end, right? Is there anything to suggest that this rally, this market rally that we've seen up until now could come to a halt? I mean, any risks on the horizon according to you?
So if you see the FII inflows and you compare that with the rest, the domestic inflows, the domestic inflows have been close to $12 billion in the last, give or take change, 2 months. And the FIIs have had an outflow of about $4 billion. So this number is, you add the two, it's yet a plus $8 billion. Clearly, promoters and the rest, have been selling. So the first thing which comes to your mind is investors may start wondering, why is the management of the promoters selling? I don't think that's bad. It's, at every level, everyone needs to make money. But I think what's interesting, and, to put your story the other way around, what's going to happen?
Oops, I think this...
FIIs start putting in money as they uttered in the last 2-3 days. So, today the FII ownership is I think, sub 16% for India. That number can go to 20. On a 4% growth on a $5.2 trillion market cap country is as much as $200 to $220 billion. So you break that up by 4. I won't be surprised if FIIs double, their investments in the country to as much as $50 billion. So I think that's a positive trigger, which is why, Nigel's first question, I think the market's in a sweet spot. Apart from, global pains, things look pretty good.
Yeah, it's like the biggest party animal who, 10 years ago has not been part of this party, because actually they've been selling, and the holding right now of FIs in the Indian markets, I think, is 16.5% odd, which is a multi-year low. All right, Vinay, we appreciate you joining in, taking us through your take on the markets as well as a couple of stocks and sectors that we discussed. Well, Surbi joins us as well on the show. Surbi's been busy. She's been working the phone lines. Surbi, I believe the finance ministry officials, they met with capital market participants. Tell us, what do you pick up on that interesting stuff?
So yeah, I was trying to just figure out what's going on behind closed doors and all the pictures that we're seeing on social media. And I kind of picked up 4 key takeaways or 4 key areas of conversation that seem very interesting. I mean, from a capital market standpoint. So number one, the PSU buzz did come up in this meeting, in this conversation. Because obviously the government is extremely happy with the moolah it's raking in, with the market going where it's going and PSU stocks doing what they're doing. Now, one suggestion that came in from industry was that when you start looking at divestment, which was the expectation after elections, and now that we have, Modi 3.0, please start looking at low floating stocks first. And the rationale is very simple and clear, that it is here where sometimes valuations can go completely out of whack and maybe, even enter bubble territory in some stocks. So that was request number one, that look at divestment, particularly in the low-floating PSU stocks. Number 2, and this is a really hot subject, on F&O. So how can the F&O market be cooled down? Does it need to be cooled down? That was another point of debate. And industry participants did acknowledge that, yes, there is a need to ensure that retail investors don't get burned. So how do you do it? Now, one suggestion was, and of course, there's no unanimity on this, but these are deliberations that were sort of going around, that increase STT on the big whales, the big fish. And, what do I mean by that? The high-frequency traders, the algo-based hedge funds that are trading in large numbers, large quantities, and many of them are actually foreign funds or foreign-based funds. So set a threshold in terms of the turnover, and that's how you can segregate and filter out. So retail will probably be out of the purview. And, wherever trading volumes are extremely high with some of these hedge funds, there increase the rate of securities transaction tax. By the way, just a little bit of trivia, I was doing some research on it. India, by the way, accounted for 84% of all equity options contracts, not in value, number of contracts that were traded globally in 2023. We were just at 15% a decade ago. Now it's 84%. That's the extent of increase in the F&O market. Quickly moving on, the mutual fund industry had its own ask. Now, the mutual fund industry wants the regulatory architecture to be overhauled in a way that they can start offering pension schemes. Remember, pension plans are governed by the PFRDA and, it's under the insurance regulator as well. But mutual funds also want the freedom to start launching diversified schemes, but ones that will focus specifically on retirement planning and some sort of a pension plan. So that was their ask. And last but not the least, this was something that was brought about by a lot of asset managers as well. A lot of Indian asset managers have global funds, offshore funds, which are being managed by Indians. They're being run by an Indian asset manager, but they could be domiciled in the US or, let's say, in Singapore. So the ask is that enable the regulatory framework to bring these funds onshore, right here in India. And the way that needs to be done is perhaps overhauling the safe harbor rules and as well as some taxation aspects. So the request was that don't tax individual global foreign investors, tax this at the fund level, but not at the investor level, and also make compliances a little easier. So some of these funds which are located overseas right now can actually shift base and come here at home. So these were some of the discussions. But overall, and Nigel, what I got was that it was a very holistic, wholesome conversation and a lot of exchange of good ideas. So I think a lot of participants, most of the participants came out quite happy with it.
Well, interesting, Surbhi. We'll have to keep an eye out and see what more in terms of action comes out of that. Well, let's move on then. Nvidia, well, that's been the stock that's ascended to the topmost position in terms of most valuable company, unseating the long-time tech titan, that's Microsoft. The chipmaker stocks have surged close to around 3.5% on Tuesday, elevating its market capitalization to an unprecedented $3.34 trillion. CNBC-TV18 Shireen Ban caught up with Shankar Trivedi, the Senior Vice President of the Enterprise Business of Nvidia, on their journey towards this triumph. Let's hear out what he had to say.
The shock and awe story of Nvidia, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at Nvidia, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
All right, and catch the full conversation with Nvidia only on CNBC TV18 at 7:30 p.m. and 9:30 p.m. later today.
Welcome back. You're with us on Closing Bell. We've got, of course, Mitesh Thakkar back with us for some final trading calls and some ideas. Mitesh, so what would you work with now?
So, Swami, I think, the market is kind of sideways, not giving much of an action. I think probably supported by the Bank Nifty, and that is the point which I've been highlighting, that it's the Bank Nifty which is showing good strength. So maybe you look for some buying side ideas with financial names. First of all, I have a buy on BTSC on Biocon with a stop at about 337.5 and for a target of around 350 here. And the other one which I like is BTSC on Investment Bank, which I would recommend taking a BTSC with a stop at 1522 for targets of 1550.
All right. Mitesh, I wanted your view actually on Hero MotoCorp. Stock is down 2.5%. It's had a good run, and it's down 6% for this week itself. For the year, though, it's up 33%. Any levels you're looking at over there?
Hero Motors, I think, has done very well, Nigel. It's had a very good rally. I think there are first signs of a pullback coming in, but I think this is just a pullback. I would still recommend being on this one at lower levels. So the first support area which I'm looking at is around 53.90 and then 53.50. I think that zone should give it good support. So around those levels, I would want to see a reversal and then buy for this
one. Okay, all right. Thanks a lot, Mitesh, for that. Well, let's welcome Sudeep Bandyopadhyay from IndiTrade Capital, who joins us on the show. Hi, Sudeep. Good afternoon. Good to see you win. Well, the sector that's catching your eye actually today is this fertilizer theme. Smaller stocks, Madras Fertilizer, Paradeep Phosphates, Chambal Fertilizer, NFL, you name it. They're flying away. What's your view on these stocks? And some of them are coming out of nowhere. RCF has moved from 150 rupees to 220 rupees. All of this in a matter of a month.
Nigel, you're absolutely right. I think, first point I'll make is that fertilizer stocks were not really favored by the market, and they were languishing for a very, very long time. So some amount of pickup was warranted. Second, I think the one area where a lot of reform measures are still needed for streamlining operations as well as distribution is definitely fertilizer, and government is working on that. Some measures towards that are definitely expected in the near future, which should help the industry in a big way. So to an extent, excitement is warranted, I would say, because these measures are in the offing. The third point where I have my big question mark is the news going around that there will be some major GST relief for this industry. There are talks of GST being completely removed or significantly reduced. I am not very sure whether that's going to happen, and there may be some disappointment after Saturday, when the GST Council meets after 9 months, and these expectations are building around that GST Council meet. So I'll be a little cautious as things stand today, as far as fertilizer is concerned, because to a great extent, this GST rumor is pulling the stocks. But fundamentally, I think a better valuation was warranted, and that's probably has happened. Little bit of correction post-Saturday may happen. But again, if the correction is sharp, it will be an opportunity to buy some of the good quality performing fertilizer stocks.
Any view on Delta? Sudeep, 4,000 crore market cap, 500 crores of cash in the books. A business which is okay, even with the headwind of the higher GST going ahead. The problem was retrospectively they had imposed that 15,000-20,000 crores of potential liability, there could be some relief on that front. At 150 rupees, would you look at buying the stock, or do you say no? You just buy for clarity. You can buy it at higher levels, but you don't want to buy it now.
Nigel, I go with the second portion of your comments. I think I'll wait. There are a significant uncertainty, and to an extent, probably it's not fair to have this retrospective thing. But now that it has come, for it to go away in the system, through the system, it will take quite some time. That's our belief. So at this stage, I would think that it is better to wait and watch rather than try to pick the stock at this stage. And yes, if things go away, maybe it will be good to pick up at a later date at a higher valuation also.
Okay, that is Delta Corp. Sudeep, just to talk about the moves that we are seeing in a lot of metal names. I mean, I think prices themselves have been moving higher. particularly on some of the base metals side. Do you like anything here? Any trades, even if it's a short term, maybe not a long term idea, but even from a short term perspective, tactical perspective, any ideas?
So my favorite stock has been Vedanta. People may laugh because of the multiple things around Vedanta, but the fact is, I think they are present in pretty much all the relevant metals and oil as well. Look at copper, look at zinc, they're at all-time highs, and they have very large copper mining facilities. They are in steel. And of course, on top of that, that demerger, that corporate action which they're doing, I think it will be a means of value unlocking significantly. So if somebody is willing to be a little aggressive, I think metals is a good place to be in. And in metals, Vedanta probably is the best place to be in. It has moved up. Price has moved up quite a bit from, let's say, what it was a few months back. But still, I think considering the way the metal rally continues unabated, it is good to be in Vedanta. Also, the value unlocking opportunity, which is going to happen because now the process has moved quite a bit. I think it's good to be there.
Okay, got it. So that's Vedanta, your favorite stock. And also a stock in a company on which we got lots of inputs today because of Nigel's interview with Mr. Anil Agarwal himself. So that's definitely a name in focus. Well, on that note, let's just move on and bring you some more snippets, voices from the Valley. A day after the US government filed a lawsuit against Adobe, the company's chairman and CEO, Shantanu Narayan, spoke exclusively to CNBC-TV18. He termed the US government's case as misguided and promised to fight it in court. Speaking to Shireen at the Adobe headquarters, Narayan said the world has entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler and a tailwind.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
Welcome back. Well, let's get you some more perspective on the market. We caught up with Krishna Sangvi of Mahindra Manulife, who believes that financials is now the natural call for investors and expects capex to expand in the coming years. Let's listen in to what he had to say.
Financials would have been a natural port of call considering the ownership, pattern. So that's where some money gets taken out to invest somewhere else. See, let's look at macro picture of economy. I think all sectors are interlinked. We have, this concept of profitable participation, where some sectors lead the earning growth, some sectors, lag it, but net, economy keeps on growing. A lot of capex announcement which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where, the thought process comes in, is that as and when some of those capex cycles which was initiated some time back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates, income for people who are employed. So it's, job creation, it's some Indian factors of production being paid out, as a part of this cycle.
Okay, all right. Well, Mitesh, I want to come across to you. Vedanta has come back to life today, and we've already spoken about the fundamentals of the company and the exposure it gives to all metals. And the only problem was, what is the promoter intent, which for the time being seems under check. What's your view at around 470 rupees? This is the same stock that a few months ago was 250 rupees.
Well, it's actually surprised me. It's done much better than Hindalco, the other ferrous companies, barring maybe to some extent. That's why the chart pattern still remains strong. There's no sign of weakness. So the way one should approach is that wait for the stock to clear the other price. The highest closing got is 479 on the 21st. They have 419. By some about 480, take a stop of about 12-13 points, and once it crosses 494, 495, which is the all-time high, add more and change your stop to cost.
Okay. Well, we just have a couple of minutes to go before we close out for the day. Sudeep, the talk has really been about banks coming of age and, Bank Nifty finally firing up here and there. We spoke with the SBI just this morning. Obviously, the bank is extremely confident about credit growth, about maintaining margins. It's just absolutely perfect commentary, so to speak. But incrementally, if you want to invest money in a large bank, would it be the bigger PSUs, or would you go back to basics with the private sector names?
Absolutely. At this stage, I will prefer the private sector banks. Look, what's happening is we have seen the asset quality improvement cycle and the valuation improving and all that. And I think asset quality has reached a stage where I think there's very little left to improve. So now the question comes is credit growth, and that is definitely going to happen with the economy on a roll. So now the credit growth needs to be fueled by funds. Now these needs to be mobilized. So deposit growth is going to become the key factor and the battleground for the banks. So under the circumstances, if deposit growth is going to be the biggest challenge for the banks, I will probably veer towards the efficient private sector large banks, where they have a large branch network. They have the capability and the expertise of mobilizing large amount of deposits at a reasonable cost so that the margins don't get affected when they do incremental lending. Under these circumstances, at this stage, I will veer towards an ICICI Bank or an HDFC Bank. We will have to watch carefully because they have been performing very well. All the parameters are good. Let's see how they can continue to grow their deposit and fund the credit growth.
Final question, Sudeep, before we let you go. Interglobe Aviation, on a day-to-day basis, sometimes you get to see the stock down 1%, 2% odd, but by the end of the day, it recovers all of its losses. Similar is the case that happened today as well. We know the kind of market share that they're gaining, and they have a lot of tailwinds in store. The problem is ATF prices could start creeping up. Do you think that's a concern? Or do you think it's par for the course, and given their size, given the scalability, you'll continue to remain invested?
I'm a little cautious on Interglobe at this stage. I think they've done splendidly well, and of course, you talked about market share. It's an all-time high, and probably will keep inching upwards for some time. But competition is in the way offing, and at some point of time, we don't know whether it's 3 months, 6 months, or 1 year, competition will start biting into their market share. Yes, ATF is a matter of concern. It can go up anytime and can change all the calculations in just a few days itself if ATF goes up. So under the circumstances, and if you look at the track record of airlines world over, consistently, growing, consistently performing well is a rarity. Maybe a Singapore Airlines, that's about it. And you don't have any track record otherwise of a continuously growing airline. So I will be, and Interglobe has done fantastic in terms of performance. So can they keep doing it for a very, very long time? I will be cautious there. And I will probably advise investors to be cautious as well as far as Interglobe aviation is concerned at this stage.
Okay, got it. So be a bit careful, caution advised on Interglobe Aviation. Got it. Sudeep, thanks very much for being with us and taking us through the final leg of today's trading action. I think we're down to the last 2 minutes. So let's start winding up. What's been another good day for the market? And actually, it's been a better day than yesterday. Though the Bank Nifty hasn't done as well as yesterday, the reason I say it's a better day is that it was a market with wider participation, both on the large cap screen as well as in the mid cap arena. So if you look at the Nifty, for instance, lots of stocks firing today. A lot of the metal names have done well. Hindalco is leading the charts, 2.5% up on that stock. JSW Steel has done a reasonable sort of up move with about a 2% gain coming through. You have Reliance, which has fired up 1% higher. A couple of these consumer stocks, HUL, Britannia, Nestle, all of them up between 0.5% to about 1% or so. And then, of course, no denying that banks were definitely the big support areas for the market. ICICI Bank, Kotak Mahindra Bank, Axis Bank, most of them on the upside of the screen, even HDFC Bank putting in about 0.5%. The area which was losing some ground was the auto space, Hero Moto, M&M. These are some of the names on the downside. And then, of course, there's Sun Pharma. They have some adverse US FDA action for one of their plants. They have to deal with that. And therefore, that stock was down 2%.
Okay, all right. Well, the pockets of strength actually from the broader market, just going to name two of them. Fertilizer stocks, you name any of them actually, they were up between 10, 15, 20%, whether it was Madras Fertilizer, Chambal Fertilizer, GNFC, GSFC. Just pull up the list, all of them did well. And the flip side, you also had the other one that was giving company on the upside. Intraday, you had stocks like IGL, MGL, and Gujarat Gas. All of them did pretty well in trade. So both those two pockets of strength for today's session. Well, on that note, though, we'll wrap up on closing bell. You stay with us because markets forward when we return.